Good morning everyone, and welcome to the PivotBoss pre-market video for Tuesday, May 19th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see here that the ES had a pretty significant rally in the previous session right here. Big high range day to the upside. Price pushed right back to the previous highs of their last month here, and are now starting to show initial signs of weakness here. Now, this is what I talked about to our trading room last afternoon about a fade after stop run day. So you have this huge trend day here. If you get a rejection of the previous high, you start to work back toward the midpoint of the previous session's range. So right now in early morning trading here, given the rejection, or at least given the initial rejection at the previous high and now at the previous close, we could see a quiet pullback toward the previous session's midpoint, which is 29.07.5. And if we do pull back to that zone, there could still be a little bit of a buying opportunity for a continuation and a try to break higher. But if there's a failure here, again, we could be stuck in this trading range where we trade around a little bit. Now, retesting this low or anything in the 2900 could be a buy for a continuation and an attempt to break higher. If it can't hold 2900, that's when we rotate back to the bottom of the range and try again. So right now, range bound, and it is day after trend day here with an initial reaction at the previous high, which could lead to a bit of a pullback, followed by perhaps a trend higher if 2900s hold. Okay, then NQ is next here. Very similar price action in the NQ. Right here, you'll notice an uptrending market, very nice uptrend that we've been working with. We were able to figure out this pullback and that it may occur and where the target might be here, and then from there we were able to get long again for a nice continuation. We are now at new highs. We are seeing an initial reaction to the previous session's high, and again, if there's a failure to get, say, above 93.50 or stay above 93.50, 93.60, that will open up a return a bit lower. Again, based off of the previous session's trend day structure here, a failure at the previous high would open up a return back to the midpoint of the previous day's range, 92.35.88. Now again, given the trend, if we do pull back here, it could be a great buying opportunity for another round of weakness, or another round of strength ahead. So if we do get a little bit of pullback here, it could still be a buy until proven otherwise. Alright, let's take a look now at, by the way, above 93.60 opens up more upside ahead. Now, taking a look at crude oil, this one is up about 1.2% this morning. It had a perfect pullback after the previous day's trend day and is now holding after that pullback. Again, here's the midpoint of the previous day. We're holding it perfectly after a big 3-day explosive move from the 7-day narrow range. Again, the 7-day narrow range here was forecasting a move of about 9.5 points. It's now lowered a little bit to 9.3. All we need is a little bit higher to reach that, and the upside target here to strive for is 35s. That's the previous month's high price. We have rallied all the way back to that point after taking the midpoint bid. 35s is the next target ahead, and after this pullback here to 32 and even as low as 31 here, the day's low is 31.13, yesterday's midpoint 31.33. I mentioned yesterday to our group that 31s could open up 35s ahead. It could be a four-handle rally. If we fail to hold 31s, that could open up a deeper pullback that could still be bought right now. So at the moment, still headed higher toward 35s until proven otherwise. Lastly, taking a look at gold futures. This one put in a big rejection the previous session. We saw it starting to develop here early in the day. I mentioned before that if it can't get above 1765, we start to rotate back down. And it's very reminiscent of what happened back here. 1765 was the level as well. It led to weakness. The retest led to weakness. Here led to weakness. And yesterday, it failed to hold 1765s, broke down from a narrow range that had formed above it, a box. And now we're holding at lows. So this type of rejection at the highs, again, we're at the top of this range right here. That's the edge of resistance down here, edge of support, and very clear. When we got long here, we got long down here for a push higher to 40 and into 65s. We took profits along the way, and now Looking for this thing to perhaps rotate back to the bottom of the range, unless it can hold 1720. If it can hold 1720 here in this PIMA trigger zone, perhaps there's a higher low and go that can happen. But if it can't hold that 1720, we rotate right back down toward the bottom end of the range into 1680. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.